What's good, YouTube? My name is Mish, and I've traded with Topstep and Apex for a whole year. And by the way, this is not a review of either company. This is just my experience of how I became CPT while trading what is essentially simulator. So if you're here for Apex or a Topstep review, this is not going to be it, so you can skedaddle. But if you want to hear about my journey of how I became CPT, well, I started last year, summer 2023, about midsummer. I signed up with Topstep with their the 50K account, and I've traded that a few times. And I think on my third I blew like 2 3 evaluations, and I think on my third or fourth, I finally got funded. It took me 3 months or so. This was like close to November of last year, and of course I blew that account because by November of last year I was still relatively green. I still didn't have my strategies dialed out. I still didn't have my framework dialed out. But then I found out about Apex and how cheap their accounts were with their 90% sale. So I got a whole bunch of those 25K accounts. They have a $1,500 goal, so that's a lot easier to pass than Apex 50K, and it's cheaper. So I loaded up a bunch of those accounts on their 90% sale. I gambled a bit, I'm not going to lie to you. I did. Nothing came from that besides a lesson of you shouldn't gamble. There's no future in that. But on the accounts that I actually did trade with, I learned a lot. And what I really took away is I was able to put on so much more risk because I'm only risking like $18 for this account. So I'm gonna take a bunch of trades that make sense to me, and then I'm gonna review those trades, and I'm gonna gather that data for weeks on end, and then I'm gonna review that data. And I recommend you do the same. So basically, I got a bunch of accounts with Apex, and I was trading everything that made sense to me. I mean, everything. And through that, I was able to figure out what works and what doesn't because I upped the volume of my trading so much, and I had so much data to work with. So by the time of, I want to say earlier this year, early 2024, I started really playbooking what makes sense to me. And let me show you what that looks like. So I started gathering all of these. Let me see, let me make this smaller. I started gathering all these trades that make sense to me. Now, if we open any one of these, I have annotated screenshots, and I also describe, exactly what I saw, exactly what made sense. And I started categorizing these trades by time. These are just trades that make sense to me. I started categorizing them by the daily setup, by the intraday setup, by the time of day that they're happening in. And lately, I even started categorizing them by, is it an A plus trade? Is it an A trade? Is it a B trade? If it's anything below, it shouldn't even be here. But by the way, if you don't know what an A plus trade is or what it should be, drop a comment and I'll either make a video on it or I'll refer you to a framework that I use. But with me doing this playbooking and just trading a whole bunch of volume, I started to notice, obviously what's working and what's not. And what I really noticed is that I shouldn't even trade in the first 15 minutes. Most of my good trades come past 10 a.m. Most of my good trades have a level of interest, or it's a pullback. I learned this by gathering all this data. I gathered all this data by trading a whole bunch, guys. So if you're a beginning trader, I highly recommend, put out a good $500 and buy a shit ton of accounts. And I highly suggest actually trading them seriously. Like, don't gamble. Like, actually size correctly. Don't use NQES. Use MNQ. Use MES. And size with like 3 to 4, 3 to 5, And you should be good. You shouldn't blow them. That's going to allow you to trade one account for a long time before you actually blow it, even if you're wrong with every trade. And just gather data, guys. Gather a whole bunch of data of what makes sense to you. Start playbooking. Start annotating and collecting charts. Literally, just grab a chart that makes sense to you and start annotating the shit out of it. What do you see? What makes sense to you? Why it makes sense? Eventually, you'll see it so many times that your eyes, or you'll annotate it so many times, that same setup, your eyes will get good at recognizing it in real time. So with this at my with this in my toolbox, with this playbook, I was able to know what I should aim for in my trading day. Like if I'm seeing certain things, I probably shouldn't even trade, or if I'm seeing certain things, I probably should look out for a trade. And I was starting to get a good consistency of like 65 to 80% on the last 3 to 5 months of my trading. But where my consistency really came is when I simplified my trading even more. I started trading long only, like only long, 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 never short. So I'm only looking out for one thing, and equity curve started going up. Now, I also made this framework as far as timing, execution, mental, and what it is for A plus trade, and a little fail safe. This is just for me personally. Like anytime I'm down, this is I need to check back on this. And if I'm down twice in one day, I probably shouldn't trade unless there's A plus. If there's 3 red trades back to back, is you shutting that account down because it's only trouble from there. But I've created this framework for myself, and this really helped me get consistent. I mean, my timing, as you can see, this is my trading window. I don't trade any earlier and I don't trade any later unless there's a specific setup highlighted here. Now you could read all this. I'm not gonna read it all out to you, but I have a framework for my execution as well. I always start locking at 10 points. I never let my winning trade turn into a loser. I always keep the trail tight once it starts moving in my direction. I have a mental check-in that, sometimes my first trade of the day is a red trade. And I told myself, after checking my hit rate and how beautiful it was, above 65%, it made sense to just stick to my normal execution and get that loss back over a multitude of trades, versus sometimes I would take a loss and I would hope or try to make it all back in one trade. That never worked. Well, I mean, there's a few times it worked, but generally speaking, it almost never worked. The consistent approach to this is to just keep trading my strategy and my framework the same way I would normally. And even if it takes me 2, 3 to 4 trades to recover that one loss, this is what's going to keep me in this game long term. And then at the very bottom, you'll see I have a A plus trade, exactly what it is. Number one, it needs a location, a level of interest. A level of interest is either support or resistance that is acquired from a higher time frame chart, like the daily, the hourly, the 4-hour. You will see pivots in price where there's obvious interest from either buyers or sellers. Those are levels of interest. Without that, without a higher time frame confirmation, there's no trade. Absolutely not. Now, secondly, we need some sort of a structure or a signal bar. When I say signal bar, I'm talking about, something like a hammer or an engulfing candle. And this trade has to be within the first 2 hours. If it's outside of, past 11:30, it's no longer an A plus trade. I don't care. Not for me anyway. This is my framework. I even made me a little diagram. No level of interest. Is there a new low of day spring? No trade. Yes, well, it's a B plus trade. And if you take a B plus trade, you can't be mad at yourself when it doesn't work. So, and there's another one. So that's that. And with me reaching this level of consistency, I started to really grow my accounts. Mind you, I'm still trading with Apex at this time, and this is about, I want to say late March. I grew an account from late March to May, like 2.5, 3 months of trading that account. I grew it up to from 25K to 29 something. So it was almost $5,000. I've never seen money like that in my life. Not from trading anyway. This was huge to me. Now I couldn't withdraw any of that money. Even though I traded consistently, I was hitting my goals, I was trading my strategy, hitting my $200 days every day. And I couldn't pay myself. I couldn't reward myself after months of hard work, after almost a year of refinement. And it's all my fault. Apex wouldn't pay me out because I broke some of their rules. That's on me. I should have read the fine print. I'm not mad at them. I'm mad at myself, and that's okay. But I was really mad at the fact that I've taken so many good trades. I mean, so many good trades. And I don't get to taste the win, the victory from none of them. So I decided early June, I'm going to open up a self-funded account. $500, that's all I had. All I had to spare. And June was a slow month for me. There was a lack of A+ trades. I sat on hands mostly. And I think I've only traded about 2 weeks out of the whole month. So maybe like 10 trades or less. But I did double my account. I think I took it up to like 1,200. I'm not sure. It was $700 worth of withdrawals. And I had one bad trade, which was a loss. But I paid myself every day. Every day that I hit goal, I withdrew the money, and it helped me with my psyche so much. And that's why I traded so little, is because I was paying myself every day. Market could have been trending in an uptrend. I mean, ripping, huge bull run, and I felt no FOMO like I usually would because I've already paid myself yesterday. I already paid myself the day before and the day before because I've been paying myself every day. And normally, the old me, if I see the market running, and even though I don't have a strategy or an entry there, like I have no business trading it, the FOMO would get me. I'd still get in there and get steamrolled somehow because I was trading outside of my framework. So paying myself really, I mean, after every win, after every goal, every day, it's such a huge game changer, guys. And this is my whole advice to all you that are beginners. Allocate some money for accounts, $500 to $1,000. Buy an account, trade it. Take notes of what you're trading. Take notes of how you felt. Take notes of what time it was. Screenshot charts that made sense. You need data to review. Once you gather enough data and your profitability starts going up and you're noticing, all right, like you check your statistics on Trade-of-8 or whatever broker platform you're using, and you can see the statistics for a month and you're averaging 60% plus hit rate, I think you're on the right path. And maybe you need to look into doing less, because if you do less, maybe you'll win more. And that's really what it is. You just simplify the shit out of your trading and pay yourself daily. And I guarantee, I'm sorry, don't pay yourself daily because you can't. But once you see that consistency, start a self-funded account and, put 2,000-3,000 in there and just trade 3 to 5 MNQ, $200 daily goals. Pay yourself every day. See how much that changes your approach mentally as a trader. You will, once you start trading like a business, it's going to start paying you like one. So that's pretty much it for me, guys. I've been kind of going on a yap fest. If you stuck around this long, good job. If you learned anything or if you have any questions, if I missed stuff, I'm sure I did, comment. Even if you hated the video, comment. Just give me some feedback. I'd love to know what you think. Yeah, that's it. Bye.